Amazon, the tech giant, impressing Wall Street with its earnings. Shares are up right now by about 2.3% on strong results driven by growth in its cloud computing unit and its advertising business, two of those high margin businesses for the company. But with the company continuing to spend big on artificial intelligence, is Amazon's e-commerce business at stake here? For more on this, let's bring in Mark Schmolik, who is the Bernstein Internet Equity Research Analyst. Great to speak with you as always, Mark. Let's just dive into this. I want to get your read on this earnings report and what it pertains to the consumer as well here.
Yeah, thanks, Brad. Look, I thought it was a great report. Top was strong on the consumer business side, also on the AWS side. Margins were incredibly strong as well. And, I think there was some nitpicks, certainly, and one of them is revenue guidance for the second quarter maybe looked a little bit soft. Now, I think there is some FX in there. We have heard from Jassy that, there is maybe a little bit of squishiness with the consumer that they're certainly watching and paying attention to. But at the moment, things do look like they're tracking quite well, and perhaps there's just some conservatism built in.
Okay, so all of these things considered, as we're thinking about the elements of this business that are mattering most for Amazon investors to continue to watch going forward, it seems like there's going to be some more spending as it pertains to generative AI demand that they're seeing that dovetails into the AWS part of the business. High margin business allows them to invest in other parts of their business as well here in segments. And so where should we be monitoring some of that CapEx?
Yeah, I think, they said they spent about $14 billion and expect that to increase meaningfully each quarter as we go throughout the year. Now, there's one nuance, right? As we think about investors and their biggest worry about owning Amazon here, it was a very crowded name, has been about, are we going to go enter in another investment cycle? And we've certainly heard it from, some of the other big tech names that we are going through this AI investment cycle. And so there's a fear that profits would diminish. What we heard from Amazon, though, was they could do both at the same time. They could continue to drive margins from their core business and use those incremental profits to invest in AI. That's a very specific nuance we haven't really heard from the company before, but they're certainly going to participate in this AI investment cycle. But it also sounds like they're going to continue to drive profitability elsewhere in the business.
April was a rough month for stocks here, and Amazon, they also got a fair bit of that as well, but not as much compared to the broader markets here. What does that tell you about the strength of this Amazon trade at this juncture?
Yeah, I think when the dust settles on earnings, Amazon's going to emerge as kind of the cleaner name amongst the Mag 7, in terms of where investors should be focused on. And part of that is because there's a lot of narrative, there's a lot of noise, there's a lot of question marks around where do we go with digital advertising, where do we go with AI? And I think what you'll see with Amazon is that they're in core businesses that are firing at all cylinders. Retail margins look incredibly robust. AWS is growing, so we've got that secular cloud growth story with 38% margins. That's probably not sustainable, but it speaks to the leverage in the business. And advertising is keeping pace with the really strong recovery in the digital ad market.
There are a lot of, and especially for our show focused on wealth building and of course growing wealth as well, there are a lot of small businesses that look to build their wealth via platforms like Amazon's, like Timu's even. Where is that kind of continuing to either strengthen the relationship or based on what Amazon's prioritizing, how should those small business owners be navigating their ability to build their own type of presence and profile on Amazon in this near term?
Yeah, certainly. If you're a small retailer or a small merchant, Amazon is still the best place to grow and scale your business. You certainly hear a lot of excitement around a Temu, if you're a Chinese-based supplier, or a TikTok shops, they certainly get a lot of attention. But Amazon shared that something like 60% of products are being delivered now in the US same day or one day, and that delights the consumer. And so if you want to go in a place that's going to get 60% of product searches where consumers begin and are effectively delighted by how quickly they get those products, Amazon's going to get you that distribution. And if you're a business that's just looking to build and get your infrastructure set up, I still believe Amazon's got the best, self-serve capabilities on the AWS front to get you up and running.
Mark, thanks so much for taking the time. As always, great to see you. Mark Schmolik, who is the Bernstein Internet Equity Research Analyst. Appreciate it.